welcome back to my podcast. I am your host, Erica Martinez, and today we'll be touching bases on the importance of homebuyer education and the role that a loan officer plays. And with me, I have Brian with Movement Mortgage.
Yeah.
Would you like to introduce yourself?
Yeah. Brian Cook. I'm with Movement Mortgage. This is my 24th year in the mortgage industry.
Wow.
Been 20 years originating. I was in servicing for a while out before that, and kind of learned, hey, nobody calls their servicer usually happy.
Yeah.
And so I wanted to work on the front end of it and working with clients and
Yes.
home buyers in the process. So
Awesome.
yeah.
So 24 years.
24 years in mortgages, 20 years originating.
Okay.
Been with Movement. This is we've been about a year and a half with our group that we've been with Movement. Amazing company that we're with. They do a lot of, we call ourselves an impact lender.
Okay.
We do a lot of where we want to dedicate a lot of money toward back into our nonprofit, the Movement Foundation, and that allows us to kind of also do grants and other things for nonprofits that we can match and do donations in our communities. So they really allow us to be not only a mortgage company, but as a real estate agent, mortgage person, we're involved in our community.
Yes.
That's who we work with. Those are our customers. And so being able to give back is
It's
a big part of what we do. And I mean,
Yeah.
you can kind of see it behind me, even if you can, is our values and everything else that we look at. And so it's a great company to be a part of.
That's awesome. I did not know that,
Yeah.
but that's good news.
Yeah.
I'm happy you're here telling us about that.
Sure, yeah.
I'm all about the community. I
Oh,
like
yeah.
to inform the community, give them the resources,
Yeah.
what we can do for them, because aside from them being our clients, it's important to be able to give back and help. And to me, it's a very important thing.
Oh yeah.
So
I mean, a
that's
number of
awesome.
different charities, but then it's also like those charities and how they're helping individuals and people in our communities. So
Yeah.
it's great.
That's awesome.
Yeah.
So to go off.
Of home buying, first time
Yes.
home buyers. Yeah.
So this class is a required class for Washington State to help you with down payment assistance. And you have to be at this class for about 5 hours. It is a very long time, but it's very educational because it talks about loans, rates, programs, even realtors, how to choose a realtor. It also talks about home inspection, home warranty, the process. But today I want to touch bases on the role of a loan officer.
Yeah.
Right. So you guys help generate the loans based off of what a client can afford.
Correct.
So off of that, what do you recommend for a buyer to do as their first step?
So, I mean, really the first step I think is, I'd say the first step is to kind of think about your home buying and why. That's a good part. I mean, think of like, why am I buying a home? Is it because I've been renting for so long? Is it because I've decided like, hey, maybe I've started a family, maybe I've gotten married and life changes, right?
Yeah.
And so we want to get those roots and those opportunities. And so I think that's a good question, is asking why, because that also details the house that you're going to buy.
Right.
Is it a house that you're going to grow a family in, or is it a house that you're maybe going to turn into investment property, which we have opportunities, which we can always talk on another podcast. If there's what's called a number of different ways to do that, including what's called primary residence conversion. So I think that's a why. But then also get an idea. I think it's even a good idea to start talking with a loan officer.
Okay.
The reason being is that a lot of times people think of home buying almost like buying a car.
Yeah.
But the difference is what's the first thing that you do when you buy a car? You see the shiny new car on the lot, right?
Yeah.
So you want to buy the car, you find the car first. Then what do? They take you back for what it seems like 2 or 3 hours into the back to do all your financing.
Yeah.
And then you discover what your payment is, what you want, and then is it going to work out for you, right? But then on the home buying side, it's turning that around. It's saying, hey, let's get your financing lined up first.
Yeah.
To set up what shiny car we're going to buy.
Yes.
It's a good way to kind of think about it. We can get that loan get that loan, even doing upfront underwriting. It's a big thing that I like to do, especially for first-time home buyers. It solidifies you. You've been already approved by the underwriter, so we have somebody physically underwrite you, go through the loan review to get you approved. So, kind of talking with that loan officer is a good starting point, because we can do soft credit pulls, so I can also see and determine what your credit looks like.
Yeah.
What can we work on? If it's something like, hey, I've got bad credit. Well, I've heard people say they have bad credit, but bad credit is relative to every person, and they're well, maybe you have a 620 credit score.
Yeah.
That's a score that's commonly you can qualify for, even down to 580.
Okay.
So, but if it's something where, hey, can we improve and I'm below that 580 mark, well, what can I do to improve it? Well, that's where we kind of start to help you on that path. So it's kind of getting that snapshot first. And
awesome.
so that's the good, I think, best starting point. Go the loan route first.
Yes.
In conjunction, of course, talking with a realtor, because it's a good idea to even talk with the realtor first to get an idea of what houses, what the market looks like for housing prices. And then what I do is kind of help fit into what price point you might want to look like. So
yes, good point you made on there. I usually get clients who I work with who reach out to me first as a realtor, obviously, because a lot of us think real estate realtor, right? Which makes sense. But in that order, it doesn't matter if you reach out to a realtor or a loan officer. The first step is really going to be to talk to a loan officer and get a pre-approval, a snapshot of what you can afford. And on that point, you mentioned soft pull of credit. Some people think that, you know, if they get their credit pull, it'll affect them negatively. But when it's a soft pull, it's not as...
Soft pull is kind of like, you'll see advertised like Experian. They do their credit. It's kind of, Credit Karma doesn't really do that, but like Experian is one of the 3 credit bureaus. So that's who we actually get our soft credit pull from.
Oh, okay.
And so what we do is we're going to get a snapshot of what your credit is. It doesn't hurt your credit score, but we get a good idea of what it's going to look like. And then it doesn't count as a credit pull, which isn't a negative thing to have your credit, because you have to have credit pulled for that. But you don't want to have a lot of credit pulls done, because that can affect credit, part of your credit score. So,
got it. So, with that said, you shouldn't be scared if a loan officer says, I'm going to pull your credit, just a soft credit pull, which is a good thing, because then you get an idea of what it looks like, what to work on, whether you qualify or you don't, what you need to work on, most than anything. But also on that, I'm big on credit. So I always check my credit on my app. Not that I'm gonna be sponsored by anybody, but my bank is a great way to check my my
I mean,
credit.
they usually have that little snapshot. It gives you an idea, and then you can see what's happening. But there's also, you can get a free credit report every year if you're not doing that. So there's opportunities there that you can look at, and that's a good, you know, again, make sure there's nothing on there that you're unaware of, or something. And also too, sometimes it's what people don't understand with credit is that it's not just, hey, I pay my bills on time every month. It's also, that's 35% of your score. 30% of your credit score is going to be how much credit have you used. If you've maxed out your card, whether it's 500 or 5,000, it still hits your credit score just the same. And so sometimes talking with a loan officer allows you to say, hey, we'll run an analysis and pay down this bill by a couple hundred, and that improves your score by 20 or 30 points. And that could mean a difference between approval or, and sometimes instances where you're not using down payments, it's also your interest rate. So very awesome. On that note, I wanted to talk about why a buyer should go attend a home buyer education class, and how can that tie into maybe a down payment? I think the why you should attend is that, especially if this is kind of like, hey, I've never gone through this, maybe your family hasn't gone through this. I mean, that's a common thing of where if you're a first-time home buyer and you have that opportunity, maybe you're the first in your family to buy a home. And so going through that home buyer education really allows you to, I think, go through the process of finding out some of the details that maybe, even though a good loan officer, I think, is going to go over a lot of the details, go over expectations, almost over-inform you that you're almost seemed like maybe you're overwhelmed sometimes. But what the home buyer education does is then gets all that on the table. Like one of the things they'll talk about is their loan estimate. Okay, well, that's, you know, what's the details? What is the itemization of my closing costs? Those type of things that you're going to want to that you kind of take a look at. And when we're pre-approving, usually what you're pre-approving is you're just simply hey, I'm pre-approving you for the loan. This is how
Yeah.
much you're going to qualify for. Whereas, hey, we're going to look at payment. We're going to look at payment comfortability,
Yep.
all those type of things that come into play. So that I think
Okay.
is a good part of where that home buyer education. And then
Mhm.
from the real estate side, it's, I like the things is sometimes tell them the horror stories
Yeah.
of why not to do this or why you need to have inspections done,
Yes.
all those processes. So it allows you to set up a better expectation when you go into it, as opposed to, oh, I just, kind of going by the seat of you're buying one of your biggest purchase of your life.
Right. It's a big investment.
Big investment.
No.
You don't want to go through something that, hey, I saw it on the internet. I mean,
Yes,
that's the
no.
common denominator is we've come into a world where YouTube, I love YouTube. I mean, if you want to learn how to fix the dryer, I did, I don't mind, I'll admit, but at the same time, it's something where if you're going to make that big a purchase, you're making that investment, the YouTube video is not the best place to maybe go. So that's where the home buyer education really comes into play of helping you set expectations, maybe learn some stuff that you might have been aware of. So that kind of when you go into contract, you're not surprised.
Yes.
I mean, I've bought and sold we're on our 8th home now. And I got nervous every time I've done it, just the same, even though I'm actually my mortgage company is the one doing the loan. I still get nervous from the process of it all because it is a big investment that you're doing and a commitment that you're doing for yourself and why you're purchasing. So,
on that note, I feel like people get scared because I talk to a lot of potential clients, right? They inquire about a property and like they might be the first time home buyer, or they just don't know if it's like a land purchase. They still don't know if the down payment is going to be the same or not. So they always hit me with those same questions. Like, do you know how much the down payment is going to be on this property, or what what kind of loan I can use? And a lot of that, it's more for the loan officer and not the real estate agent. But a good real estate agent is always going to be able to tell you, hey, I'll answer all the questions that I can, but ultimately I'll refer you to the loan officer first, because they'll be able to run your numbers. They'll tell you if the property is going to be qualified for a specific type of loan, and they're going to help you build a plan, even if your credit's not there or you don't have the down payment. So for like residential, part of the reason why this educational class is good for you is because you may qualify for down payment assistance. Now, it's not all of it, and it's not free money. And I think that's where a lot of people get confused, because they're expecting this money to be free. Or when they get hit with like, oh, I want to sell my house, but I still have to pay this back. Thought this was free money.
Yeah, exactly, right. So,
so it's not.
So the state down payment assistance, the way that it works is that depending on the type of loan you get, there's a few different programs. You have the most common ones, the Home Advantage. You can get anywhere from 3 to 5% of your down payment. Typically in down payment assistance and down payment, you're looking at 3.5%. When we're doing, you can do FHA, conventional FHAs, getting a little technical, is 3.5%. Conventional, you can do 3 or 5%, but it usually takes a little bit better credit. Whereas traditionally, first-time home buyers I've seen have lower credit scores. It's not a bad thing. It's just saying that's where the FHA is the best program and option. So giving you that down payment assistance, and then it's in the Home Advantage, it's 0% interest. You don't make a payment on it, and then it's paid back when you refinance or sell the home. So it's one of the kind of things that we picture into there and factor into there, but it's really awesome because the state and the bond program influxes money into the housing market, which anytime people are buying houses, that improves economy, that improves lifestyle, that improves a lot of things. They say the life expectancy for a homeowner is, all those type of things they talk about, and also to the pride and community when it comes around when you are home buyers. So it's why the state influxes money, and they even have what's coming out. They've come out with a covenant program, which is amazing. It's set up for minority home buyers. If you've been a resident, if your grandparents or parents were residents in Washington before 1958, you will be available for up to 20% in a down payment.
Oh, wow.
So it's a huge opportunity that they just recently came out a couple months ago for. It's amazing. Unfortunately, you look at the history of America, there was redlining and other things of where minorities and other classes could not purchase property in certain areas.
Okay.
Which when we talk about generational wealth, if I had somebody, a family member, buy a house in 1920 as opposed to somebody that bought a house in 1975, there's generational wealth that's been built during that time because of growth, equity, all those type of things that comes with home buying. And so this is where they're allowing to say, hey, we want to be able to give back to where the laws and the regulations at one point unfortunately kept people out from buying homes. You know?
Wow.
So it's a great program that the state's come up with now. So again, that's
awesome.
part of what you're gonna. My job is to help you discover those programs.
Yes.
But they talk about all the different programs because there's also city grants that are available. There's all types of, there's even third loans that go tie in with the down payment assistance that you can get depending on income and other qualifications. So it's
awesome.
Really helps educate to get you about what the home buying process is, but then discovering programs and kind of, again, setting you up for success when you're doing that class. So, and the nice thing about the class, you can do the 5-hour class, which I encourage because you can either do it in person or Zoom.
Right.
Zoom's a little impersonal, but hey, sitting on a Saturday morning with a cup of coffee. It was funny
pajamas.
when I was in the middle of COVID, we were doing that.
Yeah.
We were doing the home buyer classes via Zoom, and it was really funny because you'd have a couple people and they're sitting in their pajamas with a cup of coffee at 9 o'clock in the morning. So, or you can do them online. There's also self-study, so you can do self-pace. There is a fee for that.
Yeah.
But it's a way of like, hey, if I don't want to sit along for a class for 5 hours.
Oh, you don't have the time.
You can do it as a self-study as well too.
Yeah.
So, and then part of my job is to point you in the direction for that, or you can even go onto the state website for that. That's WSCHFA, something like that. Washington State Housing Finance Commission. If you Google it, it'll come up, and you'll be able to find out what I said. So,
So there is other ways you can take this class. However, I feel like the one in person can be a little bit more personal and more informational because we will have some guests. So like the inspector usually will come and tell you about what it is they find in other houses that you might not think about as an issue, but it can be a huge issue. Like maybe the roof not needed to be replaced, or something under the crawl space that you can't see just by walking into a house. And so they take care of that, and they just give you perfect examples of why it's so important to get it. And looking at a house from the outside, it may look beautiful, and you may think like, that's a perfect house. But if you see something in the report that you wouldn't see if you didn't do it, then it can save you a lot of money.
Oh yeah. So. I mean, just this, I had a client that actually went through the inspection, and they found out the windows were all failed. They had all like the seals had all failed on them, and I mean that was a $40,000 repair.
Yes.
And I say what the inspection part is if I can make a note, have your own inspection done if you're in the home buying process. And the reason being is that you don't know who the other inspector was.
Yes.
They paid, the buyers paid for the sellers paid for the inspection. We had a horror story where we went off of that one.
Oh no.
And they had a HVAC go out about 2 months after the sale, and it was not there's nothing anybody could do. There's no home warranty and anything like that. So again, part of that. Scary. Why do you want to go through that home process? Because they talk about all those home buying and what to expect. So that I think the biggest thing is to be an educated, successful buyer, but knowing, I think it's something of that the less stress you can have in the process, it's going to make it makes it better, and it makes you make more better educated choices as you go into it too. So
right. So our job is to teach you to make an educated choice on what house you want to get, what loan to use, what program to use. And there's so many programs, like he said. It's not entirely all this home buyer education class. there's more programs to it, but the right officer will be the ones offering it to you. And if they don't offer them to you, then maybe that's just not the right loan officer for you to use.
I mean, there's different programs.
Yeah.
I know some places have their own things. I mean, there's the state program. I mean, we have our own proprietary down payment assistance. So one that might not fit in the box of the state. Or if you're in Oregon, Oregon State doesn't have their own down payment assistance like a lot of like Idaho and Washington. So it's a way that we can help people down in Oregon too. So again,
awesome.
helping you navigate and then giving you, I'd say it's kind of like this, giving choices to say what's going to be the right one that fits into your needs and wants. And that's kind of, instead of saying, hey, this is the loan you're going to do, which I've seen happen. This is the loan you're going to do. This is how we're going to do it. It's saying, here's your loan options A, B, and C. What do you feel is going to be the best for you? And I think that goes a long way. So.
I think it does, because then you're thinking about all your options and what's going to fit better when you have to budget a lot of things in the process. Because the home inspection does come out of your pocket, and then the appraisal does as well. However, it can still be a credit for you at the end. So it's part of your down payment.
Yeah, I think it
helps a long way.
I think that's where like there's down payment and closing costs, and I think people forget about the closing costs a lot of times, and those are the fee. There's only one fee there to us. That's a process, like an underwriting origination fee. But then it's all these third party, it's appraisal, title, escrow, those can be, and then the state has their own fee depending on their program. So you're upwards of $9,000-$10,000, and right now we're kind of in that market of where you could get concessions. So you can get what's called seller credits to pay for those closing costs. So not only could you get your down payment through the state, but if you get some seller credits, you could literally come buy into your house with no money. Which is huge. I mean, being able to do that, keep your savings, keep your money in your pocket. Because, what if you want to do some things to the house? Or I always say, like, make sure you have that emergency fund. Those, if the hot, if the hot water heater goes out, which as a homeowner may happen, but that's why you have a home inspector to make sure the hot water heater is working right.
Exactly. Like I said, make sure they look at everything, and this report will literally have everything they look at, every little small detail, whether it's recommended or immediate or needs to be done like ASAP. So you get to pick and choose what's more important if there's a lot of alarming things. If not, then that's great. That means that the seller kind of took care of this house, and ideally that's what we want, is for everybody to be educated to take care of your house. So when it comes time to sell, all of that money that you've invested in taking care of your house, it'll also be returned in a way, and nobody's gonna be like, oh well, I was chipped out of this deal because they didn't take care of their house, and I want a peace of mind moving into this house, make sure that it's good. But
and the state requires the inspection because they want that buyer. They don't want a surprised buyer going into a house and having to, because then if they have to put money, then does that, if they're spending too much money and they can't fix up a house, is that going to be an issue for them? So again, it's part of the state, is really what their job is, part of this home buying education, and part of the process is making sure you're really aware of everything when you go to buy this house, which I think is a huge advantage. So I mean, even if you weren't going to use down payment assistance, I still think it's a good educational piece to go through just for information, which I've had some people get 10 classes that, hey, we're not doing down, I just want to get informed about home buying, and so it's a great starting point.
Because ideally there there's a limit to what you can get qualified. So if you surpass that, it doesn't mean you can't take the class. It's just a lot of information, and it's great information, and that's why I like to inform people, so that you are aware and you know what you're getting yourself into. Even if you don't need the down payment assistance and you have all the money that you need for like closing costs if needed, or down payment or whatever, that's awesome. I would prefer for my buyers to have all that money, but you know what? Sometimes life happens, and if you can get some help, why not? In fact, there's actually one, I mean, part of the state program is there is part of it that there's rates that have no down payment assistance in it. It's a conventional loan. There's no down payment assistance, but it allows you to, it kind of allows you to get
because their rates don't fluctuate based off of credit.
Right.
Their rate's going to stay is what they publish.
Mm-hmm.
And so that allows somebody to say, hey, maybe the rate might be better at the state instead of my rate. And so you still have to do the class to do this program, even without the down payment assistance.
Yep. Mm-hmm.
But again, just allows you to, those options of what's going to be out there. So that's what my job as a loan officer is to say, hey, what pieces? Because maybe that down payment assistance, even though it might not be a loan that makes as much money for my company, it's going to be a better for the consumer. And that's what when you're going with the loan officer, you want to make sure they're kind of looking out for your best interest of, and making sure what's available, not what's going to be the easiest or best for them or their company. So.
That's another point that you bring up, and I think it's very important because ultimately we need to take care of you as the consumer, the client, the buyer, even the sellers as well. But ultimately our job is to protect everybody's interest and all these forms, and make sure you understand everything in these forms, and however it goes down. Like, I just want to make sure that you guys are informed and know that there is options and that there's programs and resources for you out there. You just gotta ask your loan officer. So they should be able to give you that
the loan officer should just be coming across. And unfortunately, I've seen where maybe, I won't say banks offer their own products. And if you go to your bank, they're only going to talk about their products, which not is a bad thing. The banks might have a good product for you and a good work for you, but they're only going to be able to fit you in their box. Whereas we have an opportunity, like my company or a lender like me is able to piece out different things and different options, all the way from if we need to broker it to a different company and you're buying an investment property. I mean, depending, you want to buy a 20-unit apartment complex, there's ways that we can do that, whereas the banks or otherwise, they only have that little box that you're going to fit in and what their qualifications, where our qualifications are going to meet directly to the guidelines of the FHA and the down payment assistance program that the state has, instead of our own rules, our own guidelines in a sense. So when you underwrite and you write directly to the guidelines of FHA and conventional investors, it's a lot easier for you as a borrower because you don't have to fit inside the box. And unfortunately, when people hear that I don't qualify and they hear that at the bank, I mean, that doesn't make you feel good. But I just even recently had somebody that went to a bank first, and we were able to get them qualified because the bank had their own set, and then we were able to get them pre-approved, and they're now in contract, and so again, it was just, but if they hadn't asked and they haven't, so I think your good real estate agent's going to point you to say, hey, if you're getting denied somewhere, somebody's telling you no, go somewhere else. Even if I'm telling you no, go somewhere else. That's find out what your resources and options are. I mean, that is something. Usually, a lender like myself, if they tell you no, there's a lot of extra pieces that would come into play because we do underwrite directly to the guidelines, and we have brokers that go outside of the box of regular loans. So again, depending on what your needs are and what fits in, like let's say you're a business owner and you write off a ton of money. Business owners tend to write off, so that's how you keep more money in your pocket. It's why they allow you to own a business. So that opportunity being, well, there's it's called bank statement loans, which is where we just basically go off of the deposits of the business, as opposed to, hey, you're writing off because you have expenses, employees, and the other expenses of the business. So again, that's where the loan officer and companies like myself can go out and really reach out to discover the right loan and product for you.
Awesome. I really like that you touched on that, because teaching a homebuyer education class is basically me being a teacher. I'm not even there as a realtor. I'm not trying to sell you on me. I'm just giving you the information that you need to have, that needs to be provided so that you make the right decision. And I like what he said, because I always tell my clients, hey, you didn't get approved there. okay, maybe try a different loan officer. And I don't mean to create anything between my loan officers, but like you said, every program is different. Every officer offers different things. So maybe something they can't get you approved for can work out at somebody else. So that's great.
Yeah.
I'm glad you touched bases on that. One more thing you did say earlier, we were talking about credit score. You mentioned there's a limit on what's a good credit score.
So
what's a bad
credit score usually for down payment assistance is a 580 minimum. Anywhere between 580 and 620. Sometimes you have to have what's called compensating factors. Maybe you've got a little money in the bank, what's called reserves. So you know, that could be a retirement account or something like that you have you have access to. But it just means that, hey, if I have reserves, so it means that everything in lending is called risk is based off of risk. So a credit score is the only way that lenders have ability to measure how you've been handling loans and risk that, you know, credit cards and car loans or other things that you've been offered and obtained. And so that's their only way to judge that. And so a lower credit score, traditionally higher risk. And so but once you start to get into 620, it starts there. Or for instance, like I have a borrower qualifying at 611 right now, but she's buying with 2 relatives. So there's 3 other people that are part of the loan. If you were just buying yourself, it might be a little harder, but if you're buying with, you know, 2 or 3 other people, or maybe you got a co-signer, you know, a non-occupant co-borrower, stuff like that you can do, a co-signer, that gives you opportunities again. So it's not just cut and dry. There's a lot of different called compensating factors depending on what your credit score is. But once you start to get above 680, 700, you start to get into really good conventional opportunities where you can do conventional loans, which have just different ways than FHA and the way what's called mortgage insurance works, as well as sometimes the property you can buy. The property for conventionals, you can maybe buy something like you could put in what's called sweat equity, put in your own, you know, hey, I want to buy something that's maybe I can update the kitchen, I can update stuff, you know, hey, I mean, you know, like call it like your own a mini flip, we call it the mini flip, which is where, hey, you buy the house, but you flip it over 5 years, you know? And so maybe you do some, you know, stuff upgrades, like that, you know? So it's, whereas conventional loans allow you to do that where it might not be, you know, the property condition, those type of things, they don't worry about as much. So
that's the main difference between like a conventional and FHA, right?
So the type of loan that you qualify for can benefit. And then down payments is a little bit different. Down payment assistance, because the credit score doesn't matter, at least in the state that we do. Now, our proprietary, it does. But for state down payment, it doesn't matter what your credit score is. Now, it might help with, let's say, approval or how much you get approved for. But if it's coming into credit score, that's where when you're putting your own money in and you're putting your own money down, that's where credit score is going to play a big factor, because what type of loan I'm going to qualify for, what interest rate I'm going to get. I mean, your interest rate between, let's say, a 700 to a 780 can be, you know, a third of an interest, you know, a 1/4% or a third of an interest rate, which, you know, can be a couple $100 in payment. Right. So again, that's where credit score and why you and I hit on credit so much, because it's such a way that it benefits you when you go to buy your house and you go to buy your next home down the line. So we do, you know, talking about credit and coaching on credit as we go along through this. So
yes, that is a part of it, because a lot of people also ask me, like, well, my credit's not that great, can I still qualify? You can, but you know, it won't be as
and
much
again,
as
that's
you
why I
would
say
wish
it's all
for.
relative too. Like I've heard people like, I've got bad credit, but they hear a good credit score is 740 and their credit score is 620. Well, it's not as good, but it doesn't mean you can't qualify for a purchase. So, I mean, like I said, I mean, you can go down to a 580 credit score with with most down payment assistance programs.
Got it.
So again, and if it's something where credit's too low, well, that's the next step. What do I need to do to get my credit score? You know, what do I need to get credit up? You know, and so we coach you through that. I've had buyers that it's been a year. We've taken a year or sometimes 2 years. to say, hey, I finally got to get where my credit been,
Yes.
where I needed it to be. And maybe that's some collections that have aged out. One big thing that people say is, my credit score is low. And I say, well, I've got a couple collections. I'm going to pay those off. Well, if your collections are old, don't pay them off. Because now you're admitting collections, you're admitting to the debt, whereas a collection is kind of a dispute, almost.
Yeah.
Because you're saying, hey, I don't want to pay this. Maybe you don't believe, maybe you thought they were wrong. Anyways, well, the collection comes into play. Don't pay that back, because that could now be a negative thing instead of a positive thing. So that's why I say, when you have your credit pulled, we can run an analysis to determine, what can you get from. And especially, let's say I'm 660. Well, if I could get to 700 and do a conventional loan, what do I need to get there? And so we can help you through that process of to get to that credit score, to help you need to be, and help you coach to get there and set you on a path. Because the nice thing with the analysis, it says pay this amount of debt in this amount of time, and this will occur. And so it's a great way for us to kind of say, hey, and allows me to say, we'll contact you, say, hey, in 6 months, pay this down to this amount, or pay this off in 6 months, or whatever it might be. And so it allows us to come back to you and call it be your partner in helping, call it be your coach. We're not going to slap hands. We're not going to, we're not giving bad grades here. We're not doing game plan. We're not doing the grades here. But if we can keep on that game plan, I think where we always look at it is, you're looking to help. Our job is to help you reach your goal. I mean, so I call it like, we're almost like real estate coaches, because we're going to help coach you or get you into position to buy and, and go through that process. And so I think that's a great way. We're utilizing your real estate agent, utilizing your loan officer to kind of lean on, even if you've had your parents go through it, or you think you know what you're doing. It's okay to lean on them, because it does help them, even if you've gone through the process. So.
I've had some people say, you know what, this is not my first rodeo. I already know what I'm doing. Okay, great. So why are you reaching out to me?
How old was the horse? It's like, when was this rodeo? I mean, I always say too, it's like, I've had people like, I didn't go through this when I bought my first house, right? I'm helping out, maybe a parent is co-signing, and I'm talking to the parent, and they're like, well, I didn't go through all this. And I was like, well, you bought your house maybe 15 years ago. And I mean, just to let you know, you didn't have to be a licensed loan originator till 2010. So you think about, I mean, you were doing loans, and we were backing out. I wasn't involved in programs and what's called subprime lending, but I mean, literally it was wild west of, changing. And, so it was a real different time. So whatever your parents or whoever bought a long time ago, maybe even 4 years ago, underwriting's got a little tighter than it was 4 years ago. Lenders are not willing to, call it, finagle to make it look good. They're kind of really cut and dry a little bit. So the underwriting, so there's also that, or I didn't have to provide this much documentation. Well, you did a stated income loan in 2008, and you didn't need to give any documentation, but I'm going to get your tax returns, your W-2s, your pay stubs, your everything. We don't draw blood yet, but we're working on that. That's maybe the next presidential administration makes you do that. But again, we do a lot of, it's lending and risk-based. So we're going to do a lot of that going into that as well. So it's a big part of what we're doing is in that pre-approval process is going through documentation, going through everything so that we're not overlooking. I think, unfortunately, there's companies out there that kind of throw it against a wall and hope it sticks. They kind of work, one takes off like a rocket. Just say that. And I have a tendency, it's quantity over quality, where it's the more applications we get, then it funnels in and we'll close more. It's just a numbers game. Whereas, it's really, for us, it's really kind of making sure that, hey, you're educated buyer going into the process. And that's why we want to do upfront underwriting. That's why we do a good pre-approval. And sometimes it might take a while to go through the process. Like I had one We went through underwriting. They were newly employed.
Mm-hmm.
So, if you were newly employed, I want to get you underwritten because I want to have the underwriter make a decision on your income for me.
Yes.
I mean, I can do good pre-approvals, but hey, if I can make the underwriter do their decision, that goes a long way.
Yeah.
Instead of going through the stress of, oh my gosh, am I going to qualify for this loan in the middle of the process? You see, I've heard horror stories where it's like, the next thing you know, they're doing this loan and then they go to this loan and then they go to this loan because they're trying to qualify them. And the lender didn't do their homework up front.
Yeah.
And that's why I love the upfront underwriting that you can get and that we do, because now there is no guesswork. There's no, hey, I know what my income is so that I know exactly what I qualify for. Especially if, let's say, you're maximizing what's called your debt to income ratio, which is one of the ways that we qualify you. How much money do you have in debt versus how much money you make, right?
Yeah, right.
So we take those numbers and, that's why, credit and other things are so important, because we're going to take a look at that debt to income ratio and determine how much you qualify for all those factors. And if it's tight, let's say I qualify at 50%. Well, if 50.01 is not qualifying, well, we need to be really careful of how we're underwriting you, making sure we're doing all of our legwork so that your offer is going to get accepted.
Right.
You go through the purchase process and you get your keys.
Yes.
I haven't had an experience of it, but it's nothing worse that I've seen of where somebody gets approved and then the financing falls out.
Yeah.
And if the financing fall out, there's two things that happen. Either they did something during the process to mess it up, or their loan officer didn't do their job up front. And I think that's the biggest thing. And I mean, one question is, and do you know this? And this is a question that I always ask, is how many people do you think are involved in the transaction of buying the house?
How many people?
How many people are involved?
Let's see. I'm going to say 6 to 7.
6 to 7? Okay, so the average amount that you have is 27 people.
Wow.
So if you think about it, there's 2 here, buyer and sellers, 4. I have a processor, you have an assistant, we have title, escrow, appraiser. You have their assistants, you have all this stuff, you have the credit reporting company, you have all these factors that come into play, a notary maybe, home inspector, all these people that are going to be involved in a purchasing of a home. And so our job is to ensure that all those pieces are going to fall into place.
Yes.
And if we haven't done our ABC up front, well, then it becomes a problem, stressful, all those type of factors. And it's not. And the way that I work is we work on referrals. And if you have a bad experience, first off, nobody leaves a good review. They're going to leave a bad review before a good review.
Yes.
And second of all, it's something of where you're likely not going to refer me, and you don't want. And we live in a small community.
Yes.
Do you want a reputation like that when you work off of referrals? And when we're doing a pre-approval letter, if we have you underwritten and the other buyer is not underwritten, your offer is going to stand out better.
Yeah.
Because you've been vetted, you've gone through the process, you've stood out, and you're no longer. And instead of a pre-approval letter from another company, you have an underwriting approval letter from Movement Mortgage.
Yep.
That stands out a lot better. And I actually call the selling agent to tell them, yes, we're underwritten. This was physically underwritten by an underwriter, not just, I did my numbers and automated underwriting, which is a good loan officer's pretty on point with it. But when there's, I don't know, have you ever seen a pay stub for a nurse?
No.
Okay.
But I've heard it's
crazy. There's like 15 different shift works.
Yes.
There's all these different styles of income, and we calculate overtime income different from base income. So all those factors that we end up doing, again, that's part of that process. So that, hey, if I can go through the process, get somebody over at the employer to give me a what's called a verification of employment, give me some details of your employment so that I can pre-approve you. And if it takes some time, let's take some time to do it.
Yes.
We're not in the hurry market right now
Right.
that we were in 3 years, 4 years ago. So take the time. You're not going to miss on a house. There's
No.
not, your dream house isn't going away anytime soon. There's going to
Exactly.
be homes out there. So take the time to
Yeah.
go through your pre-approval, working with your agent. I call it a home team because
Yes.
to be honest, we don't get paid until somebody buys a house.
Yes.
And so we have a lot of vested interest. And so, but we also consider the homeowner part of that home team
Yes.
because you have to make sure you're keeping up your end of the bargain, getting documentation, and doing the right things to ensure that, making your home process enjoyable.
Right.
So that, when I say you have the best job. I go to the signing and do the signing table. You have the best job of handing off the keys.
Yes.
Which is
it's a great feeling, by the way.
it's the most best feeling
Yes.
that I know. I've seen the
working in
photos of it. I know it's
Yeah.
my favorite part. So
It is. It's a great feeling to be able to give somebody their keys on something that it was a dream for them,
Yeah.
and they've been working hard, and it's been a process. And typically, it can take anywhere from 3 to 6 months to get your keys to your house. Not from the start of the contract, obviously, but from the start of you doing like the search, talking to the loan officer.
the first phone call.
Yes, the first phone call, because obviously when you're making that call, you're just kind of informing yourself of what you need to do. All my buyers sometimes be like, hey, what's my down payment gonna look like? What's the next step off of this? But it's always like, okay, hold on. There's a big process to it, and it's a huge process. So let's just make sure that you are educated, you have all the right information, you bring all the right paperwork. And I know a lot of people will be like, hey, I already sent that. I already did this. I already did that. But sometimes because in the process, we need to make sure that it's still accurate, because it can be anywhere from 2 to 3 weeks from getting pre-approval or
Like a
underwriter.
Sometimes we might need to get another pay stub. We need to get one more
So
detail, one more explanation, and
it's all placed
and it's
part of it.
We have a long list of documentation,
Yes.
and those documents also stay with the loan file. So
Right.
loans are packaged in what's called qualified mortgages, and so a lot of times they have to be accurate, and all the loan documents stay with the loan file. So even if it's sold to another company,
Yes.
and that goes to another loan company or another servicer that's holding the mortgage, all of the qualifying and all the factors that they can go and say, hey, this is how this loan was approved.
Yep.
So that's why we collect all that documentation. And
It is
even
very
if it sounds redundant, or you might have sent me the one, I'm sorry if I asked for it again. So
No, I always say not to be sorry, because
No.
it's essential, and
Yeah.
it's just technically going to help your offer, your anything look more appealing at that, and that means you're ready, and the chances of you getting accepted on your offer is going to be 100 times better over someone who doesn't have a pre-approval, who just kind of wanted to throw an offer out there because they really liked the house and wanted to see if they're budging on what the price may be. As long as you're ready and have all that information, you never know. A seller maybe say, okay, you know what, let's do it.
Yep. So
Yeah. So on that note, we kind of just talked about what the time frame is and how to get ready for that in a matter of 3 to 6 months. Another question that I wanted to cover is, what are things that a buyer should avoid doing while in the process?
Yeah, so definitely. It's one of the things that when I do send the pre-approval out, when I even start the initial conversation, there's a big list of do's and don'ts. The do's part are sometimes most important. So it's keeping your credit card payments on time, keeping every payment up, even your phone bill, the things that you are not reporting on your credit report, keep up with those. Make sure you're not, if we're utilizing bank accounts where there, don't start moving money around, large purchases. Everything has to be paper trailed. So if all of a sudden you start moving money around where it didn't need to be, or the other big thing I say, don't deposit cash. I know a lot of people, hey, you know what? Sign at times, I want to keep $10,000 of cash in my safe, and I want it, and then all of a sudden I deposit that. Well, that can look bad because we don't know where the money came from for money laundering rules. They don't allow us to utilize that. I even had one time, it was real funny. I had a person come in. and I met with them, and then the second meeting they came in and they said, "Hey, I've got my down payment," and they said, "Hold on, let me get it," and I was like, "Okay, that sounded weird." And they literally had a Safeway plastic
Really?
bag with $40,000 in cash.
Oh my
They're like,
gosh.
"You can see the money right there; it's right there," and I was
What's
like,
the problem with that? Yeah.
but it's, hey, so that was a lot of money sitting on the
Yeah.
table. I was like, "You're riding around now in your car?" So that was a
Well,
funny one, but
that's
yeah,
funny.
still though.
Yeah.
But again, that's
No,
part
don't
of
do
that.
that.
Part of what we're doing is that
Mhm.
so the do's and don'ts. But don't, I would say, if you're shopping lenders at one time, I think it's okay to have your credit pulled a few times, because that's
Yeah.
really the only way that I would say, if you're going into contract or you want to find out what interest rates are, who's the best, and you're finding out who you're working with.
Yeah.
If you want to shop around, again, that's where that comes into play, where they might. But the worst thing I would say is don't go to the car and have the dealer pull your credit. They will have 15 banks pull your credit. Remember, I talked about credit pulls.
Right.
If you have all those credit pulls, it could be a huge hit to your credit. So
Yes.
if you're thinking about buying a home, hold off on the car till after, I'd say, if you can.
Yes.
We were just talking before that, hey, if you have to, you have to. I mean,
Yes,
hopefully it would work out.
yeah.
But if a car dies and you got to get a new one to get to work, that's what it is.
It is what it is.
The new purchases, but it's also adding to debt.
Yeah.
We pre-approve you, and even if you get into contract right before you close, we do a credit snapshot. Remember this, we talk about soft credit pulls.
Right.
We kind of do the
Yes.
same thing to find out what if there's going to be did you get new debt? Did you have somebody pull your credit while we were in the process? Did you apply for a new loan or a credit card with somebody else?
Yes.
So those are the things that we're going to do. So don't try to add to your credit. Even if you have a credit card and you think that the plain $500 plane ticket isn't going to cause your payment to go up, or you're going to pay it off beforehand, it can affect you in the process. Because again, if we have to do a credit refresh where we have to pull a new credit report, or we have to find out about, see if there's any additional debt, that could vary. And I recently had a transaction that happened.
Oh, no.
Luckily, we were able to get through it, to work through it. Had to finagle some numbers a little bit on his, had to pay down a little bit. It worked out. We were able to get this homeowner's insurance lower to make up for it, but at the same time, and we talked about it, but when you're going through a process for 3 months, you can forget about stuff.
Yes,
So
definitely.
I always say, I think the most important part is that before you do don't refile your taxes. I had that happen one time.
Oh my gosh.
Somebody, we pre-approved them, and then she decided to rewrite her taxes so she can get some more money back, but it made her show that she made less money. We haven't ever had that happen but once. So, but again, hashtag don't mess up your taxes. And I think the first thing is just, if anything, ask your LO before you do anything, of saying, hey, I have to do this, or this is coming up. Is it going to be an issue? And we can tell you yes or no.
Right.
And maybe it might not be a problem. Hey, I've got to take some money out of my savings account because I've got to fix my car.
Right.
Yeah. Putting more money on a credit card, or getting a new Les Schwab tire account, not endorsing Les Schwab necessarily, but again, just part of that, of where, again, you're product there. So don't go out and get the new credit while you're in process, because again, we're trying to buy a house, we're approving you, and any of those numbers changing can all of a sudden, now you don't qualify. And
right.
when we're in do you want to go through the process and then have to wait another 6 months to a year to buy a house?
Right.
More rent, more money, and especially the emotional aspect. I think that's,
that's
home,
another one.
people don't talk about the emotional part of buying a home, but it is emotional, because you're committing to something really big.
Yes.
Especially if you're maybe buying it with a spouse and you're dreaming of a family and you're doing those type of things, or whatever. Maybe it's an investment property you've dreamed of, or whatever. I mean, all those type of factors. So don't do stuff. And if if there's any doubt in your mind or any question, just contact your LO first, because they're going to help you answer that and discover what that's going to be. And, I always tell people, hey, if you can wait, just wait, no matter what it is. It'll make it easier for everybody. So
part of that is we are kind of like your advocates. So if you have a question, feel free to ask. I personally would rather you ask me before you do it, and then find out like, oh my gosh, I should have just asked you beforehand. Like, yes,
Yeah.
There's simple things we can avoid if you just ask, and it doesn't matter. It can be your loan officer, the realtor, but just beforehand. It does take anywhere from 3 to 6 months for like a first purchase or any purchase really.
Yeah,
but
finding the home, going through the home buying process.
That also part
I mean,
of
I've
it.
had people where it's like all of a sudden it happened really quick, where it's been like all of a sudden they entered into a contract in a couple weeks, like, and they didn't think it was going to happen so fast.
Right.
So, but it's all about being prepared.
Yes.
And that's, I think, where the biggest part is that I'm being prepared, and then taking the time to, you know, going through the education, going through the pre-approval process, talking with your realtor, finding out, you know, and especially too, because you don't want to go into a house purchase and then a year from now going, oh, I don't like this house.
Right.
I don't like this area. I don't like this. I don't like that. I mean, you can't check off everything. I mean, I love the people like, it doesn't have the creek running through the back. You might not get that in your first home purchase. You know, but hey, that's your dream in your home. That's great. Might not be the first one, but if it doesn't check off the list, that's okay. Yeah. But I think that's where we come into play, is just helping you set up, because then I get into the home, and then we knew where your location was. We knew what I think payment comfortability. I don't always talk about with buyers how much house you're going to qualify for. Right. But what payment do you want?
Exactly.
Because that's going to be more important than anything. Because just because you qualify for a purchase price doesn't mean your comfortability is the same as the next person, that they want to have that mortgage payment. You know, even though you can qualify for it, if you're not comfortable, you know, you want to go in there, and especially too, where if you don't want to stretch yourself, or maybe like I'm working with a buyer right now where she's working, she's 55, she's buying her first home.
Oh, wow.
Which is, I love it. It's really cool. But she's also going, hey, I'm trying to retire in 10 years.
Yes.
So what does that picture look like, and helping people navigate that a little bit. And I think that's the part that I love about it, is that it's not just what's going to help you buy your home today. But I think a good real estate agent, good LO, is saying, okay, this is the buying the home, but this is the plan after. You know, this is our 5-7 year plan of, is it opportunity that this is the investment property we're buying? Is this the starter home? And then I want to move to a bigger home in a couple of years as I've gained value and gained equity in my property. So I think those are the fun part of what we do a little bit. So
it definitely is. Yeah. I had one buyer that was like, I need to sell my property and move to something smaller, you know, because I don't have time to do all these maintenance, take care of lawn and stuff. She's an older lady, and I told her plenty of times, we can make this work for you. We can make it happen in a matter of 2-3 weeks, because she was pre-approved and she was gonna sell her house and everything. But at the end of the day, what scared her was her monthly payment, looking at what she was going to pay to what she was paying now. So all I could tell her was, if you don't feel like this is the right time and you really can't make it happen, then it's not the right time. Because at the end of the day, you're the one stuck with the mortgage payment. I'm just here to help you make that process, or make that move, or that step. But I always tell them, look at the bigger picture, make sure that your payment's going to be doable, and you can budget that with what you make right now. Because even though the excitement is there to get a new house or whatever, the payment is what you need to think about as well.
Because we pre-approve you, when we pre-approve somebody, we're proving they're off of their gross income, not net, after Uncle Sam and Medicare and Social Security and all the other parts come out of it, right?
Right.
So if you think about that, let's say if I'm approving, and kind of a max number that we look at is 50% debt to income ratio, right? Yeah. So let's just say you really, we're talking now, if let's say Uncle Sam takes 25% as a round number, maybe a little less, but let's just say that's 25%. Well, now I only really have 25% to live on beyond my debt. And that's really, if you start to think about, that's a third.
Yeah.
You know, that's 2/3 of my income, my disposable income after I have taxes and everything else, is going to be my mortgage and debt. Yep. So again, that's where budgeting and planning, that's where the home buyer, the education part comes into play. Is one of the things they hit on is home buyer education is budgeting in the process, you know? Yep. I think one thing I do give buyers an exercise to, especially first-time home buyers, is the bank statement. You know, we don't usually get them printed, but print one out and get a bunch of different highlighters. Okay, and highlight. Okay, this is food. This was I ate out. This is one, okay, yeah, I didn't, but you need to buy that, you know, this, and then you can start to really see where your money's going also too. And so that way, you know, maybe home buying might be easier if I change some habits, you know, and that's one thing that if you want to have somebody like myself go over, but it's a simple exercise you can do on yourself is just determine, well, where is my money going? And I think that's the one thing, like the big factor we always say is, well, how much money am I earning? You know, you can make all the money in the world, but if you're spending a lot and it's out, you know, well,
where's
again,
your money going?
You know, where is your money going? Are you going to Starbucks every day? Are you going to a you know, are you hey, I want to go, you know, and like where is my money going that I'm spending? Is it something, and where can I cut out expenses? You know, like, you know, you might love all your cable subscriptions, your Netflix, your HBO, you know, I know, right? You know what I mean? We all love them. But is there something in your budget you can take out where, hey, if I take this out, home buying becomes easier. And that's the part of where sometimes we have to decide a little bit of what's important there. But again, that's where it's not just cut and dry, what's your payment, what's your rate, what's your term, but also, hey, well, what's your needs, what's your wants, what do you do you have hobbies, do you like to, you know, so going over those, you know, those bank statements really kind of help point out and set you on a path of how am I spending my money month, because I might be able to cut out some expenses, because I think sometimes it's not that we don't make enough money and we just have too many bills, you know what I mean?
Bills and expenses
and those add up.
A lot of eating out.
So again, you know, maybe it's a home cooked meal or otherwise, and or otherwise.
Budget.
And so budgeting and helping those. And I think that's where coming in and the home buyer education talks about a little bit as well too, is that part of the budget and what that means to the home buyer. And again, making you a successful buyer, making you a successful, not just a buyer, but a homeowner. And that's what the state down payment assistance course is really going to offer, is how do you become a good homeowner so that it's less stress on you, you know, less cost to you in the end, you know, with maintenance and other things that you need to plan for and other things. So
that's awesome. I love that you put that in a picture for you to understand, because it's a lot of questions, a lot of information, and you probably still have more questions that are going to be a little tailored to your needs. So with that being said, reach out to myself, to Brian. Where can they contact you?
So an easy way is you can comment briancookhomeloans.com is my website. It goes directly to my Movement Mortgage. But you can also reach me 509-202-4787. You can text, call. You know, texting seems to be the new email, so I text a lot, especially during the day. And so those opportunities, so you can go through there. And it's a good way. I mean, if you want to start the pre-approval process, that's where you can actually go. There's an online application. That's actually where I direct most people, because it's the easiest place where you can do on your phone, watch TV in the evening after work and do your application. And then you can also eventually upload documentation, those type of things. And so those are great places to start. Also on Facebook and Instagram, kind of put out informational stuff here and there a little bit. So probably share this podcast on there a little bit too.
That's awesome.
So, but those are a great way. And it's, again, I love talking about it. It's, you know, I talk about, I have a 8-year-old and he was 4 years old, and he's like, Dad, what do you do for a living? I mean, those questions come up and you're like, how do you tell a 4-year-old
what you do for a living?
I mean, as a real estate agent, how do you tell a person that's like a child what you do? And I think what it came down to is like, I help people. And I think I think most real estate agents and most loan officers, they're coming from the passion of helping people. And our job and our passion is to help people buy their home, home ownership, how it creates wealth, how it creates, you know, all these type of factors that come into play of home ownership. And so, and being a part of that, it's really rewarding.
Awesome.
I mean,
amazing.
The stories and the people, and, you know, the people, like I had one couple that, you know, they moved from Africa here. They had to, they were refugees from war-ridden Sudan, and were able to buy a house.
That's awesome.
And I mean, to help them through that process of where their life was, and to now where it's going to be, and their eventual family that they're going to have, and other things. And I think that's why the education part that I
It's
think
important.
that we want to educate, and
Yeah.
why you do it and why I do
Yes.
it is because it's like being the educator, helping that process. Because I've coached baseball for a number of years. That was my background, was baseball.
Oh, okay.
And
I see it.
I say my most rewarding thing, and I also think it's home buying too, because I see it later, is it's not when you coach them, but what happens afterwards.
Yes.
And I think that's my most rewarding, is when I've seen a home buyer that, hey, I'm starting a family, I'm needing to, I want to sell this house, and we're gonna do this and move into this, and what that creates. I think that's the most fun and most rewarding part, is that you're seeing what happens afterwards, you know, and seeing growth, and you're seeing changes or up, you know, and especially where some of the buyers, I mean, I'm gonna get close with you. You know, I know a lot of stuff about you by the time, you know, probably your family doesn't even know, but at the same time, I've become friends over the years with some clients just because you become so close to them, and you realize, and it's such a personal thing. And my wife says, you know, sometimes she feels like, hey, I think you're a little bit sometimes more too emotionally, like, you know, where I call it waking up in the middle of the night or something like that, because you're trying to help somebody or otherwise work through something. And again, I think that's just the rewarding part, is where that getting their keys and walking through. My coolest story was somebody got their keys, and the buyer sent me a picture, and it was a key and an engagement ring. Oh. And he had proposed at the doorstep.
Oh, that's cute.
When they bought their first house together. And so those are the type that, you know, that's the part of where it's not just the transaction, but like the people, you know, the people behind it. And that's why the education part, I think, is why we do it, and why it's so important, because
definitely
help people along the way onto their home ownership, and getting people onto the right path, and then that keys and those important parts. It's a really cool thing. I always tell people, make sure you have a housewarming party. Yes. Don't forget to have the housewarming party, especially that first home. Invite your friends, invite some neighbors.
Whole different vibe.
Yeah, hold it, and just have some people and make a mess. Don't worry about making your, you know, keep it, especially when you move in, it's probably a little dirty, right? It's like boxes everywhere.
Well, I don't know. I mean, I like to have it clean.
Right when you move in, you want
for my clients, you know,
yeah, that's
house
true.
Because it's just a nice little perk. Like, who wants to clean when you're moving to a house? You know what I'm saying?
Right, exactly.
So like, it's just a little compliment thing that I like to do, so that you can just come home. Well, that too.
I get pizza because nobody likes to cook when they're moving.
That's right. Yeah.
You give them a piece of pizza.
I do a little gift basket with like snacks, because you're unpacking.
Yeah,
you want something to snack on.
Yeah, right.
You don't want to worry about cooking.
And if you want to invite us to the housewarming party, I have been to a couple. Yeah. I don't mind. So
it's personal, and
if you make it personal and other things, because I have, you know, I mean, not only have helped clients, but helping friends and family over the years, and so it's the ones that I've been invited to where you like, hey, we're having a housewarming, we'd love for you to come, and you know, you were just their loan officer, right? You're like, hey, you know, it goes a long way, right? You know what I mean? So, and who doesn't love a good party? So,
feel loved. So. That's like a little reward. For all the hard work
You know, I mean, it is. You know, it is. It's not always. You know, it's the living and the paycheck. You don't always get the thanks, right? And there's always not the big thank yous. I think at the end, the real estate agent gets a lot more of the thank yous, just because you're delivering the keys and it's the end and it's a big happy. Whereas
they see my
usually my last time you're seeing me is you're signing a whole bunch of loan documents when I'm sitting at you at the signing table. So,
but you are very important.
Yeah, I mean, I guess
without you, there wouldn't be no me. Yeah. So and without you, there wouldn't be no us.
Yeah,
so
right.
With that, thank you so much.
Yeah,
for
thank
being
you.
on our podcast.
I appreciate it.
It was fun. I really think clients were going to take a lot off from this podcast. You gave a lot of information. And so I hope a lot of you reach out to Bryant. He's very informational, and I think he can help you on your first step.
Yeah. And again, it's all about, I think, like I said, I mean, I think that just help. I mean, if we can help you in the right path and get you on the right path, and and I think where some people, the reason people get scared, you had mentioned earlier, is because they think that now all of a sudden they're going to commit. And it's sometimes it's not, you don't have to commit right now.
Right.
Just start the path, start the asking the questions, because
Yep.
eventually it'll help you get in and get you comfortable to where you need to be. And then
exactly.
that's the goal.
Yeah.
Cool.
That is the goal.
All right. Well,
Right.
thank you. I appreciate it.
You're so welcome.
Yeah.
And to you, thank you so much for tuning in.
Yeah.
Keep watching my pod, and I hope you find something informational in here and share. Maybe someone out there needs this information.
All right.
See you next time.